Joining us this morning, Citi's senior tech analyst, Jim Suva, talk about the quarter. Jim, always good to have you back.
Carl, it's certainly great to see you. And all I got to say is, wow, what a print last night. And the commentary was even better.
Yeah, I was going to ask you, saying that we're doing okay on leading edge chips and then talking about supply constraints getting better in the March quarter than December quarter. Is that the most important talking point as far as this quarter goes?
It's the most important talking point, but for investor longer term, it's important to note the company is generating a tremendous amount of cash flow and innovation. And we lay out 5 reasons why this stock can even trade higher, including some new products that are likely to come out this year. But what you talked about, Carl, was exactly spot on, but this isn't the end of the story. In fact, here's the scary thing to think about, scary and exciting. If Apple can pull out a beat this big, imagine what would happen in a more normal environment where they can get enough supply of components to meet demand. It would be that much even better. So in a tough environment, they just crushed it, and it was really amazingly good. And there's more good things to come as 2022 unfolds.
So the spring quarter is normally when they talk more about capital returns. Which is going to be more important, that supply normalization in the face of good demand or getting money back to shareholders in the next 3 months?
Well, they are currently buying back stock, and they do pay a dividend. In April, we do expect them to announce another very big stock buyback. And they've been doing that as a cadence, very predictable for the past several years, Carl. So I do think that that will be important, but somewhat prescribed a little bit or alluded to. We do think, importantly, though, that the supply chain getting better. You know, everybody's paying higher shipping costs. There's less airplanes flying around the world. There's less cargo moving around, and it's more expensive. When Apple can get rid of those costs, and they haven't been raising prices to every single item for consumers, that's going to flow directly through to the bottom line. They just hit very high margins, and they can even go higher. It's putting aside and squashing the case of those who are negative, saying that the technology for Apple is going to get commoditized and pricing and margins lower. That's not the case. It's actually going higher, and Apple's got an entire ecosystem that is drawing more innovation into it.
Yeah, Jim, that would all argue, it would seem, in a different environment for a higher multiple, but in the environment we're in, with rates potentially going higher, investors don't seem willing to pay quite as high a multiple. So give me your valuation take here on the stock and, you know, given your expectations, obviously, that you've already outlined.
Well, David, once again, you're always very astute to what the entire market's doing. And we actually raised our revenues and EPS materially on Apple based upon the report last night and what's going on. But our target price of $200 did not change. And the reason for that, David, is exactly what you talked about, is raising interest rates and valuations. So we took our what's called price to earnings valuation multiple from a 32 times down to a 30 times. So we tapered it a little bit from 32 down to 30. It's still, you know, a high growth, high value stock. It's not a low value stock, but we did not want to get ahead of ourselves. So we took our valuation multiple a little bit lower in the realm of the environment with higher raising interest rates, which typically is not good for growth stocks.